Welcome to TradingView. I'm here with Stephen Woodcock, who's Senior FX Trader at Plutus FX. How are you today, Stephen?
Very well, Zach, thank you.
Right, we're going through a few FX situations here. Hopefully you'll have a strong view. Maybe it'll be against what the other people's homework is. Euro dollar, what's your take on this?
Well, you know, my long-term view is that euro dollar is going to eventually go back to 0.8 to the dollar. Yeah. That is it. But for the moment, it looks like what we're doing is we're still mid-range. We've got offers above 113, and we've got bids just above 108, 108.5. That's the wider range. Currently, these levels here, this 111 sort of 20-30 area we're trading at, it's a bit of indecision around these numbers. Are we going to trade higher? Because are we just retesting this? Are we retracing the previous move we've had down to 108.60, or are we going to break up now? For me personally, I see no reason why we can't just break back and go back towards the top end of the range again. We seem to be seeing a little bit of Euro friendliness ahead of the US elections. People say that we broke lower. We didn't break lower. We went back to the bottom end of the range at 108.60. What I see is we're back to 113, 13.5 again for me. In the meantime, bit of indecision and really not, it's been a sideways move as well, this market all year. And this has probably been the hardest cross to trade all year because it's always come back. It's never, you've not got the move. You've never, unless you sold it. Well, even if you sold the top end of the range and bought the bottom end, what have you made? You haven't made very much at all. So for me, this is quite a hard cross to trade. And also as well, with so many different crosses go into euro dollar as well to affect it. Euro yen, euro sterling, all the other, stuff. So for me, still, it's play the ranges. It is still play the ranges euro dollar, and don't think it's broken.
So not quite on the same hymn sheet as Akhil Stokes there. No. All right, but let's go on to the next cross, which is Kiwi US dollar. Again, somebody looking for a push to the downside. Is that your view?
Well, it's not my view. I'm Aussie and that area friendly at the moment. Yeah, I'm expecting commodities maybe to survive and maybe start to, I don't know, just look a bit better from here on in, and obviously that will affect the Kiwi.
And these two areas, I suppose, Australia and New Zealand, they look like a party zone compared to Europe.
That's right,
UK
yeah.
and America.
But then again, they like you say, they are a party zone, because I know quite a few people out there who are partying at the moment. But I think what we're seeing is like you say, they've had a great time. They managed to miss what we've seen in Europe and the US. But it's not been cheap. You come, I've talked to friends out there who are buying a pint of beer and it's £7 and stuff like that. And but I think gold's going to rally. Some commodities are still trying to touch higher levels, which for me will maybe assist this move. The actual longer term sort of trend is still lower. But I'm going to stick my neck on the block and just say it's held for a moment, and I think we may be seeing moves back to higher levels. Basically.
Right, so it's TNT Sunrise maybe right in the end, but at the moment it's still pressure.
Just a little bit, yeah.
Okay, next cross we have Euro Canadian dollar from Wave Trader. He's also expecting down. That would be nice if it worked like that.
It would, and I'm not going against his charting and whatever there, but for me at the moment, I'm a big oil seller, yeah, and oil over the last 18 months has mirrored oil. The Canadian has mirrored oil, and so which means for me the Canadian dollar is going to weaken. And I like the chart formation. The last dip off, it held above 130 as a big psychological number. I'm looking for dollar CAD up to 138, which with what we're seeing with the euro friendliness ahead of the election, should maybe we should see higher levels. After that, I'm not too sure. Euro dollar may be seen to come lower again, which takes this lower. But EURCAD for me it's not one I actually chart that regular. I do watch it. It's one of the charts I have on my system, but I don't trade off of EURCAD because the two makeups of it are quite convincing on their own. So for me, yeah, I wouldn't discount what he's saying ultimately, But for the time being, maybe for the next month, I think it's probably got maybe a little bit of upside.
Okay, let's go on to the next market, which is Aussie yen from Excavo, also looking for a downward movement.
Yeah, off that chart. I mean, I like looking. I mean, that chart line there, I do like, and you know, and until that breaks, you've got to say, yeah, that's good and it's working. And we're sort of like we're trading a tad away from the line. When we keep going attacking it, then you know you'd say, well, hold on, it does look like it wants to break. But for the moment, it probably the chart looks like it wants to come lower. You know my thoughts. The Bank of Japan are trying to weaken the yen. I'm friendly towards the Aussie dollar, which would say, right, we're going higher Aussie yen, okay, which is the way that I'm playing it, really. But on that trend line, yeah, you can't discount that, and until that breaks, you'd say, well, sell the top of that range and look for a lower level.
Okay, that's it for TradingView. Thank you to Stephen Woodcock, Senior FX Trader at Plutus FX.